In our business, what's interesting is the wirehouses, which dominate our customers, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens,
explosion.
New information coming in regarding the inflows into these ETFs. So many institutions still have yet to buy. The Bitcoin ETF's hot start seems largely driven by retail investors. Data shows that the average trade size for the biggest spot Bitcoin ETF, BlackRock, hovers around 13,000, suggesting that a big chunk of its demand is coming from non-professional traders. Interesting. Bitcoin ETFs pulled a record $2.56 billion in inflows last week. This is the highest weekly inflows since launching. And not all, but most, a larger percentage than originally thought, is retail size investors. And this kind of lines up with what the insiders are saying, right? Cathie Wood, despite the huge success of these ETFs, she admits that the majority of demand that she expects to enter through these ETFs have not got their ducks in a row yet to do it.
no wirehouse has approved Bitcoin yet. So all of this price action has happened before they approved it. And so, we haven't even begun.
And institutions like Standard Chartered Bank, an 800 billion sized institution, are realizing the implications of this and actually raising their Bitcoin price targets to 150,000 by end of year. And then most haven't even realized the implications of these ETFs year after year after year, with supply flow decreasing every 4 years. Like, it's crazy what's about to happen to Bitcoin.
So what's your timeline for 1 million USD Bitcoin now? And is there perhaps a price target beyond that now?
Yes, our target is above that. We've got a 2030 target. So it's well above that. And with our new expectations for institutional involvement, the incremental price that we assume for institutions actually has more than doubled, because we don't know how quickly some, the more independent registered investment advisors in the United States, those platforms are saying, give us 3 months to do our due diligence. The others are saying we need at least 6 months. So, I would put those in the institutional bucket as well.
But in your view, Cathie, all of the factors are moving the price of this in an upwards trajectory.
Yes, indeed.
So prices are down, yet activity is up. There's more demand every day and less supply flow around the corner, less than a month till the Bitcoin halving. This pre-halving consolidation is healthy. Patience is key. Bitcoin has crossed the technology adoption cycle chasm. Bitcoin has crossed this now. Bitcoin is doing what Uber did. Bitcoin is the Uber of finance. The world's most successful rideshare app, Uber, grew so popular so fast that it became electorally impossible for politicians to oppose it. That same dynamic is at play today with Bitcoin. Try as she might, the politicians against Bitcoin, the few, like Elizabeth Warren, cannot beat back the waves of culture.
So many people liked it from the consumer standpoint and from the gig economy driver standpoint, people who wanted to supplement their income, that it became electorally impossible for the administration of the city to really try to sit on it and crush that industry. And similarly, I think you're seeing with Bitcoin now, there's so many people who see value in it that the institutions really can't sit on it anymore. It's just busting through that brick wall in a very democratic way. The politics, in this case, both commercial and government institutions, are flowing downhill from culture.
So Bitcoin is expected to grow by institutions, but look at this. Crypto is expected to grow by institutions. In this report by Bernstein, they name Bitcoin, the Ethereum ecosystem, Solana and other L1 blockchains, gaming, and other cryptocurrencies. The cryptocurrency market is expected to 3x by 2025. This might be conservative, but analysts at Bernstein are predicting the entire crypto market cap could grow to 7.5 trillion by end of 25. Specifically, they're predicting Bitcoin at a $3 trillion market cap, Ethereum ecosystem at a $1.8 trillion market cap, and top L1s like Solana at a $1.4 trillion market cap. Let's talk about other altcoins. Let me show you that crypto is growing. Not just Bitcoin, not just Ethereum, but quality crypto projects like Cardano. Cardano finally gets a fiat-backed stablecoin. The ticker is USDM. Layer 1 blockchain Cardano has welcomed its first one-to-one fully backed stablecoin, USDM, launched March 17th. The Mehen Finance founded stablecoin allows holders to mint or redeem USDM via the United States dollar and differs from existing Cardano-backed stablecoins such as DJED and IUSD, which are algorithmic and synthetic-based. Major milestone for Cardano. And Cardano is refuting rumors that it has abandoned its scaling project Hydra. Cardano is still scaling. Charles Hoskinson took to Twitter and wrote, "I've been seeing some videos claiming that Hydra has been abandoned. It is just pure FUD. The team has never been more productive and motivated. There is great community engagement and new papers on the way for enhancements to the protocol." So I don't know who's saying this, but it seems the greatest trick these VCs ever played was convincing the cryptocurrency market that Cardano is inferior. In other news, CZ Binance, founder of Binance Exchange, is launching a new project. He says, no new tokens, but I say you never know what happens down the line. Ever since Ethereum's Dencun upgrade, we're seeing ETH Layer 2s get more used. Base surges to 2 million daily transactions. The 350% jump in base daily transactions comes amidst a vast reduction in fees following the Dencun upgrade. Chainlink's CCIP revenue surges over 180% over 2 months amid massive adoption. The cumulative revenue for cross-chain protocol, which launched in July 2023, has reached 370,000. Chainlink founder Sergey Nazarov explains the ultimate vision for Chainlink. Listen.
The ultimate vision for Chainlink is to be a decentralized computing marketplace where developers can show up and request any data, any off-chain computation, any connection to really any system that could be an existing system or a cross-chain system, and to receive that data in a trust minimized way. So in a way where it was computed using Oracle networks and is provably secure, provably decentralized, provably reliable enough to control value. And then giving those developers and the people making all the smart contracts the ability to modify what level of security they want. So as the value in smart contracts grows, the need for security grows. And so the budget for security grows. Because there's a big difference between securing $1 million or $1 billion or $100 billion. And if you're securing $1 million, you only need a certain amount of nodes and a certain amount of security features, and that's a certain cost. If you're securing $1 billion, that's another set of features, another set of nodes, another set of costs. 100 billion, it's like a whole different story. Basically, more nodes, more features, more security related costs. So the fundamental goal of Chainlink is to create a market where all off-chain decentralized computation can be delivered for data, compute, connectivity purposes to accelerate what smart contracts do and to allow them to be connected to each other in ways that create this Internet of Contracts. That's the fundamental long-term, in my opinion, goal of the system. And I think if you get to a world like that, where a smart contract can say, I need this piece of data, I need that about identity, I need a connection to these 3 other contracts, I need to be connected to Swift for something, I need to be connected to a CSD for something else to get approval because, I'm doing this in this jurisdiction. If you can compose all of that in a number of minutes, because all of those components exist and clearly represent what they are and have a clear price and have a clear security guarantee that's measurable, then instead of taking months to make financial products, instead of taking months to do transactions that are complex, they can happen in minutes to seconds. Basically, as quickly as smart contract code can run to collect all the different building blocks, all the different data oracles and all the different identity oracles and all the different other contracts and other chains with the help of the cross-chain oracles. And so then you can basically build financial products and systems for everything, for insurance, for gaming, for the financial system in minutes. And that really, for me, is the true long-term vision of smart contracts. It's not just tokenization. just like email is not just the vision for the internet. The real vision for the internet is all information technology, all information interacting with all the other information in a useful, easy to compose, secure, efficient way. That's what the internet is. That's what we need to get the internet of value, the internet of smart contracts to. Just like it takes you a week to build a web application, it should take you a week to build a fully featured thing that you can release as a smart contract and advanced digital asset. That's really what we're going towards.
COTI cryptocurrency launches a $10 million rewards program to support its version 2 token rollout. In addition to the existing COTI token holders, the eligibility for airdrop rewards have been automatically extended for all treasury participants. If you want to learn more on COTI, I'm an investor in COTI, I'm bullish on the project, check out this video we released 3 weeks ago. My name is Aaron at Altcoin Daily. 2024 is shaping into a great year. See you tomorrow.